Hello, I'm David Frazier, aka The Market Monk. We're recording this video on Thursday, April 10th at around 6:45 in the evening. This will mark the official launch of our new internet-based TV and radio show, which is called The Market Monk Show. And at some point I'll probably tell you the reasons for coming up with that silly name. It goes back years and years ago. In fact, I'll tell you about it a little bit right now, where a friend of mine who invests heavily in the stock market and has done so for about 25 years, just like myself, visited me one day at my home office in Redondo Beach, California. And he came in to my office and he said, "Gosh, it's so dark in here, and you got stuff all over the place. What's going on? And you're in your robe. You look like a monk." I said, "Yeah, that's." I said, "That's pretty funny." He said, "Well, you are a monk. That's all you do is study the markets. You're the market monk." So we've laughed about that for many years, and quite honestly, I said, "Hey, let's use that as our new name, themarketmonk.com and the Market Monk Show." And there's more reasoning behind that, and that is, unlike a lot of people in this industry, and I've got a lot of examples of personal experiences I could use to support what I'm about to say, I truly do everything that I can, really go out of my way to try to help stock market participants make money in the financial markets and to minimize the risk during difficult market environments. And over the past many years, I've done a very good job at doing that. Now, I don't always get everything right. I mean, last year I was heavily in cash for most of the years, which was a wrong call. Slightly over a week ago, I advised subscribers to our newsletters to get fully invested in the financial markets. I already had them approximately 60 to 70% invested. And boy, was the timing wrong on that. So I'm going to make mistakes, but what I'm not going to do is I'm not going to cover up my mistakes, make excuses, wash everything underneath the rug, and try to act like I'm always right, because I'm not always right. No one is. If they are, they're either in jail or they're going to jail soon because they're lying to you. And I don't tell you what could happen. Anything could happen. I tell you what I expect to happen, and not on what I believe. Beliefs don't mean anything. I base my recommendations based on a lot of research and analysis, and I go with what the data supports. So anyway, that's the basis of our show. Well, I guess to say it a little bit more, really we abide by two overriding principles. One is performance is everything. If you're not performing well overall, then why are you in the business? Why is anyone listening to you? And I can tell you, over the past at least 10 years, I've tended to be right about 70% of the time. That's 70%. That's pretty darn good. I can tell you, most of my competitors are nowhere near that level of being correct and giving advice that help their listeners make money. And most of these folks tend to never talk about performance. There's a good reason, isn't there? Wouldn't you want to talk about performance if you did a good job? But if you never talk about performance, wouldn't that suggest you've done a horrible job? So performance is everything to us. Number two, we tell it like it is. And we base our comments on the data. And here's what's going on right now to tell it like it is. Well, we've had a big sell-off in the U.S. stock market over the past 2 weeks, and primarily in the NASDAQ Composite Index. And if you listen to the major financial broadcast shows, these folks, here's what we've heard over the past several days, that momentum stocks are responsible for this big decline. This has nothing to do with momentum stocks, okay? A momentum stock is a stock whose prices tend to rise based on more and more investors or speculators coming into the stock, and oftentimes doing so because the revenues and the earnings of the company are increasing at an increasing rate. And there's good reasons for those speculators, investors coming into the stock and pushing the stock higher. There's numerous momentum stocks that are holding up quite well, actually, over the past couple of weeks. What we've actually have had, in reality, is a big downturn in story stocks. That is, stocks of companies that have never made a profit, and looks as if they might not ever make a profit, and their prices are based purely on a good story of the possibility of making some profits at some point in the future. Also included in that camp are stocks of companies, once again, that have a very, very good story. They got this great new product or service, but whose prices relative to the recent profits, that is, now we're talking about companies that actually have made a profit, or their projected future profits, their prices of their stock relative to their recent profits and their projected future profits is way out of whack. It's like 3, 5, 6, even 10 times those projected earnings. And that's just insane to put money in those stocks. And I never advise investors to put money in those types of stocks. Sometimes it hurts when you see a stock such as Tesla run up sharply. That's Tesla Motors or Athena Health or, I got a Netflix, many companies. But you just got to stay away from those stocks. So, now, are we getting hurt by this recent downturn? That is, are our subscribers getting hurt? To some degree, yes. Our core investment portfolio, our speculative portfolio, and our income portfolio, all of those model portfolios have actually held up very well over the past couple of weeks. They're down about 2.5% for each of them, right in that neighborhood. The income portfolio is down only about 1%, I think. However, we are getting hurt in our short-term trading recommendations. My timing over the past few weeks has just been horrendous, and we're getting hurt. However, I've gone through all of those stocks carefully, and I'm convinced, I'm not just hoping, I'm convinced based on my research and analysis that all of those stocks are going to bounce back into and make profits within the next few weeks. So I'm okay with where we are. One other comment. The economic indicators that I monitor on a regular basis indicate that economic conditions throughout most parts of the world are going to increase during the second half of this year, and that stock prices in general are going to rebound. And therefore, I would tell you not to pay much attention to this big sell-off in storage stocks. That's all for now. I'll speak with you again on Friday. Thank you.